one.
Hello, everybody, and welcome back to Dash Traders Newsroom. This is Sizzling Summer Stocks, our report for June 11th, 2021. My name is Michael DeGioia, and I'm the Director of Educational Services, and I'm a licensed professional here with Dash Trader, and I'm joined here by my co-host, Jill Molandrino, Global Markets Reporter from Nasdaq. Jill, how are you?
Good, doing well. Good to see you guys.
That's good. Good to have you back. Let's jump right in and just talk about it. Obviously, everybody can tell when they go outside of their house, whether you're going to the gas pump or you're going to the grocery store, inflation hits a record high. When does it start to affect Fed policy? Next week, we have a Fed policy meeting. What are your thoughts on inflation and when will the Fed start to respond? Or are they going to stick to their guns and continue the policy as is? Love to hear your thoughts on this.
Yeah, it's so interesting when you talk about inflation, and I think they will most likely stick to their target as it is right now. I think what they're going to be looking for is, we know there's significant demand right now. We know that there's supply constraints everywhere, which is why things are so expensive. What's happening with the new auto market? You know what it's like if you just moved or you're trying to get a contractor, the cost that goes into that, trying to get labor and so forth. At some point, supply is going to come back and it will be back at pre-pandemic levels, but that demand is going to wane back to pre-pandemic levels. So inflation may be curbed for that reason once supply and demand comes back. And if it does, that will handle inflation on its own. It's a deflationary thing when you have oversupply and not as much demand. So I think it's going to be a wait and see game to see if the system naturally balances itself out. I spoke with a few economists on my show this week asking that exact question. And for the most part, it seems to be like Q4, Q1 2022 is the consensus. But for right now, with new cars, again, as a great example, there was not enough. I had from Forbes Advisor, actually Forbes Wheels, one of their auto analysts on with me today. And he was explaining to me that car dealers have 60 days worth of inventory on their lots at all time. Mike, it's now down to 29 days. Yeah. And because there's such a shortage of chips as well, they're actually manufacturing cars and not using some of the higher end options that come along with it for the sake of just getting cars off the lot. So he was saying that he test drove a Chevy Tahoe, which is a high-end Chevy SUV, and they didn't use the chips because they weren't available for like automatic start stop, which I guess is an option on it. So there's just shortages of everything. And I think until that supply comes back on, it's just that supply demand balance, and hopefully it takes care of it itself. And the Fed doesn't have to make any moves regarding that. It'll just be a deflationary event.
Okay. I mean, you don't think that this had a lot to do with just the over stimulus of governments just printing too much cheap money and keeping too much money out there, a flood of the monetary system? Because there's a lot of talk of just the oversupply of cheap money causing this inflationary effect. Obviously, there are supply chain deficiencies, and there certainly was a reduction with all the interruptions in the supply chain. But could it have been an oversupply of cheap to free money that just flooded the system?
Yeah, that's part of it too. That's certainly part of it. But again, I think it's really supply and demand constraints as well. That's what it is at the end of the day, regardless of how much money is out there in the system. When you think about it from labor shortages and so forth, you have managers that are doing busboy work as a great example. You can't find hostesses, you can't find laborers for contractors. So it's not even like there's enough supply to fulfill that demand. It's happening all over the place. It's not specific to new cars. It's not specific to restaurants. It's everywhere. So I think that is probably a bigger issue in my mind. I mean, we've been printing money for years. This is nothing new. It's not the first time we've spoken about this. But
yeah, we're like experts at printing money since they're
talking about tapering at some point. I mean, taper is in the conversation. I wouldn't be surprised if you start to perhaps see that in Q4. So free money is nothing new to us, and we're having the taper conversation. But this, we haven't experienced this supply demand unbalance in quite some time.
Yeah, and bringing up the supply chain, I think that there was a very I remember I was very young, thank God, but I remember when just just-in-time supply chain became like the in thing, that everybody moved to just-in-time supply chain, which was like the greatest technological advancement. In this instance, our just-in-time supply chain actually worked against us, because now you have all these supply chain breakdowns, because previously companies used to keep an inventory of chips. They used to keep an inventory of whatever they needed on hand. And now, because of technological advancement, we moved to this just-in-time kind of supply, and things get there just as you need them. Therefore, you kind of get more use out of your cash and your purchases. And now this has actually worked against us in the pandemic, because that it allowed us to have some vulnerability to our supply chain. So I think that also played a fact. And I think that companies are certainly going to be looking into having some alternative to just using just-in-time supply chain logistics.
Yeah, and we've seen that play out across the board, not even as a result of COVID, but what happened with the Colonial Pipeline. It just shows how vulnerable logistics and supply are here. And I think these are critical things that the infrastructure bill will be addressing, but it's not like we have the luxury of time. This is something that we need to start working on now, because while we're considered leaders of the free world and so forth, I mean, just look how stymied we are without our supply chain. We can't. There's not enough computers, right? Because they use the same chips as the cars. You have all the cars. You have everything else. Medical equipment uses
chips are in everything.
Right. So we need to become more independent when it comes to that.
Absolutely. And talking about vulnerabilities, the G7 leaders, recently got together in the United Kingdom, and they endorsed the international corporate tax minimum of 15%. This is a vulnerability of governments to corporations just moving offshore and then just moving to whatever corporate tax shelter is the newest, latest, and greatest corporate tax shelter. So the G7 leaders endorsing some international action to kind of set a minimum of 15%. So it's not so easy for tech giants specifically. And I know there was actual specific talk of Amazon because they had some questions about the margin. Amazon is a very low margin business, and having a corporate tax, what the effect is on that. But certainly closing this loophole where corporations can just, move to another jurisdiction to kind of avoid some corporate taxation. And, there's companies out there like Apple, for instance, that have a huge, enormous amount of cash on their books. And, obviously I'd love to hear your thoughts about this kind of coordination to have an international, has the market factored this in, or is this something that is still going to potentially affect corporations worldwide? What are your thoughts on the long-term effect of this?
Well, Mike, I happen to agree with you. It's a great point that you bring up. I feel like stock prices are not reflective of this at all. I mean, this is a 15% that they have to pay now that they weren't paying before. That's a large chunk, right? So, it'll be interesting to see how they engineer this, and they always do. But I'm surprised to see that the market didn't have such an adverse reaction to this kind of
zero effect so far. No factoring in.
This week in the market, for the most part, was a snooze fest. I mean, we've been in a range for a couple of weeks at this point, but I'm really surprised that it wasn't even a topic of conversation. I feel like everyone's so fixated what's happening with digital assets and memes that this would have been a big topic in my mind. I mean, we're not even earnings. There's nothing else to talk about. Like, why is this not being discussed? Perhaps it doesn't get anywhere, and investors don't think it'll come to fruition. Perhaps it's what the stock market is telegraphing. But it's a fine balance here. It's almost when you have like billionaires tax, and we talk about taxing corporations and so forth. As you know, things trickle down, right? You can only tax the rich or corporations so much, because if they don't have the cash flow to support everyone that works for them, you know what it is when you have someone who has a multi-million-dollar home, you have the cleaners, you have nannies, you have landscapers, you have all these different things. Well, if you take half of that away, it's not as easy to employ people. It's the same thing with corporations too. Do they get more lean to be able to pay this 15%? It's a very delicate balance. So I wonder if the market thinks it's more of, let's say, perhaps political posturing, it's trying to inject like a new way of thinking, but maybe investors think it just won't come to fruition. It sounds good in theory, depending on how you look at the situation, but implementing something globally is very difficult to do. I mean, look at when it comes to digital media, there's different standards across different countries around the globe, and we can't come to one cohesive framework on how to regulate platforms or big tech or whatever you want to call it. So I think globally coordinating this, it's not going to be as easy as it looks on paper.
Or there's lack of willingness to enforce like intellectual property. I mean, clearly all the counterfeiting of the world comes from China and Turkey. I mean, the vast majority of it. And there's really no enforcing of product counterfeiting. I mean, there's a lack of willingness to enforce it. So I think that the market not factoring in the 15% minimum corporate tax is the question is there willingness to enforce this kind of talking point, which is that, yeah, we're going to tax you, but without teeth and enforcement, how do you actually collect that 15%? And of course, there's always going to be some small island in the Caribbean or in the middle of the Indian Ocean or somewhere far, far away that won't be in line and won't pull the line. And of course, the corporation will move there. So it's really difficult to enforce this. And it's really difficult to do anything globally. And certainly there was a lot of great talking points a year ago when the global pandemic started. And then, of course, we just recently had the commitment of the G7 members to donate over 1 billion vaccines to poorer countries over the next 18 months. And of course, just judging from the price of Pfizer seems to be the big winner, although all of the vaccine manufacturers pretty much moved up, together. But the biggest movement by far was certainly, and the biggest beneficiary was Pfizer, with the United States giving them a 500 million vaccine contract over the next 18 months. So certainly that's good news for all the poorer countries, but it does illustrate how difficult it is for the world community to kind of work in concert. What are your thoughts about overall? I mean, we haven't talked about it in a while. I mean, obviously vaccination has done a world of difference here in the United States. What are your thoughts about this commitment to give 1 billion vaccines to poorer countries?
Well, there's a couple schools of thought here. Good thing, of course. If we have oversupply, why wouldn't we do it? The only way to get globally reconnected is by getting everyone vaccinated. I guess the downside to that is that the target that we had for 70%, at least here in the US, we're only about 50% vaccination. So it's kind of a double-edged sword. And, I feel like it's a marvel how the scientists and the healthcare industry were able to bring a vaccination to market in just under a year. Is just a scientific feat. And sadly, it wasn't as well received as perhaps expected. So it's amazing that we're donating it. Why wouldn't we? It's the only way to, again, get global interconnected, and everyone deserves a fighting chance with this. But perhaps that says that the vaccination itself wasn't as well received. So it's kind of a double-edged sword there.
Interesting. That's an interesting, take. I mean, I was looking at it from the take of, like, at least from listening to Biden's comments in his speech, was that there was a lot of vaccination politics with, like, for instance, China using their vaccine with strings attached. I mean, at least 3 or 4 times in that speech, President Joe Biden mentioned that there were no strings attached, that this was a straight out give with no strings attached. So it seemed to me like that the vaccine was being utilized from a geopolitical perspective to kind of undermine this kind of vaccine diplomacy that had been going on, mainly in Latin America and in Africa, with some of these less effective, really seriously, significantly less effective vaccines that were being used with strings attached. At least that's when I was listening to the conversation. That was an interesting, I was interested to hear how many times he had repeated no strings attached.
Yeah, that's a good point as well. And of course, his focus right now is China for sure. So I think some of those digs were intentional. is, and really his focus right now is with China and with Russia. So it's not as surprising to see those kinds of digs being made. But yeah, I think it's interesting. I didn't even think about it in those terms, but it certainly is posturing, as you had said.
Yep. So that brings us to our latest, kind of a little foray into politics, because I mean, it seems like at least in these kind of quiet summer months, I mean, you sit there and you watch the news because I mean, the market it was one of the quietest weeks. It was kind of like a slow drift upward. And there were some moments where it went down, but it was a slow drift upward during the course of this the quiet summer months. So the other news that was that there was originally a kind of a back and forth between the Republicans and the Democrats, trying to work on this infrastructure bill, and then now that original kind of framework got scrapped, and they have now brought in a group of 20 bipartisan senators working on the infrastructure plan. For me, I mean, if it gets passed, great. What I'm interested in knowing is what is the practical application? What companies are going to be the ones that benefit no matter what? If the deal gets passed, is it U.S. Steel? Is it 3M? Is it, what are the companies? What sectors is it? Is it, I don't think that the infrastructure bill so much affects renewable energy. But certainly companies that could potentially, I mean, maybe, construction companies like Caterpillar potentially will sell more machinery. What are some of the ideas that you think that what companies benefit if and when this plan gets passed? And I'm just going to say when the plan gets passed, because something needs to be done.
I agree with you 100% on that one. It's so interesting, Mike. We talk about the growth versus value, opening versus closing trade, reopening trade, and so forth. But when you think about the makeup of the U.S. economy today, regardless if it's a steel company, construction company, tech company, every sector has an element of technology in there. So I think it's not going to be not so much which sector versus other is doing better. I think it's going to be company specific, which is great for your stock picker, because especially you're seeing this shift with industrial companies in particular. They're even rebranding themselves as technology companies. So I think there's going to be elements in there. If you're providing the technology, if you're providing the chips to GE or to Honeywell, if you're providing the data analytics and resources and cloud services and so forth, that's where I think the winners are going to be. So it's the one, the companies that are winning contracts, that are moving forward with renewable resources, that are using newer technology as we build for 2021 and beyond. I think that's where the winners are going to be, not so much like an either or.
Mm-hmm. Mm-hmm. I mean, that makes a lot of sense. I mean, it kind of reminds me a little bit of when I was trading back in the late 1990s and early 2000s, when every company rebranded themselves as an internet company. Everybody just threw a .com behind their name, and they were all of a sudden an internet company. But you're right, and I actually really I really like what you said. I mean, every company now has an element of technology to them, right? I mean, if you're Caterpillar and your your backhoes and your bulldozers are much more different than the backhoes and bulldozers of the past. There's an element of technology to every company, even the value companies. I think one thing is for sure is that in an inflationary environment, which there's no doubt we're in an inflationary environment, that value stocks are supposed to do better. But, certainly every company has an element of technology to them today. And I think that the infrastructure plan will certainly have an impact on technology companies that get the contracts. It's going to be very, very stock picking focused. That is what a stock picker's market is, an inflationary market. So if they get a contract, I think you have to do your homework a lot better and be very vigilant as to see which companies are actually going to get which contract and do what kind of work once this plan does get passed and as the plan is being developed. So very, very good point on that. Well, on that note, that brings us to the end. I want to wish you a wonderful, wonderful weekend, and I'll see you in 2 weeks.
All right, sounds good. Have a great weekend, Mike.
Thank you so much, Joe. All right, everybody. I'm going to just switch my screen so you can stay tuned, and we're going to take a look and jump to the charts. All right, so in jumping to the charts, would just like to first feature one of the indicators that I, when a market and the one chart that I have up here is the S&P. As always, I want to point out that here on my Dash Trader software, I have all of my charts pre-configured for easy loading. And I'm just going to bring up a chart with my MACD already pre-configured on there. So I don't want to have too many, but I'm going to do RSI, MACD, moving averages, and volume by price. Okay, so going to just take out my RSI real quick. Okay, so here we have the S&P. I'm just going to make this a little bit bigger. And I usually start my analysis, I do what's called top-down analysis. So, very often I will just take a look at the weekly, right? And if you notice, the one thing, you got railroad tracks straight up on your weekly. The moving averages are indicating, very, very slow and steady incline. Just going up and away. And if I drop this down to the daily, so notice that the Dash Trader software has these quick buttons that you can just click on your chart, and you can see that now we've switched to the daily from the weekly. Now I'm pointing out here the MACD because we are so there's kind of been it's incredibly uncommon, but the signal line is above and kind of disconnected from the histogram. So notice that the signal line here crossed over and came back in. It had gotten incredibly extended. So let me just go over the MACD a little bit from the beginning. So this part here, these kind of light blue bars is called the MACD histogram. And then you have these two MACD signal lines. So the green signal line crossed over the red signal line. It started trending up. Here you have a green signal line crossed back over the red signal line, trended back up. What we have here is that the green signal line has crossed back over the red signal line, but we're still above the histogram. So what that tells me, and we have come off significantly, meaning that this sell-off from a couple of weeks ago took us back to striking distance where this can kind of come back into the normal relationship. And the normal relationship is that the signal line should cross over the histogram on most circumstances. When it's turning bullish, it should cross over the histogram and then stay above there, but not get overextended. Here we were extremely overextended. The sell-off and pullback got us kind of back in check, but now we are not making, even though we're making higher highs on the market, we are no longer making higher highs. It would take a lot of buying and a lot of pushing for us to make new highs on the MACD signal line. So that this is setting up for what's called a possible divergence in the MACD and the MACD signal line. So there might be a divergence between the MACD signal line and the MACD and the regular price and volume chart, that we're looking at, just price and volume. Let's take a look at the DIA, because the same picture goes across the board. The DIA is slightly more bearish than the S&P, because if you look at the SPY, the green signal line is still above the red signal line, which says it's still bullish price action. The histogram is still bullish. We look at the DIA, the green signal line has crossed back under the red signal line, and the histogram has now gone negative or below the 0 line. The technology stocks have moved back up to the high. So technology, as Jill had pointed out earlier, technology has kind of come back into play. And we just mentioned that kind of everything has an element of technology these days. Technology is pressing against all-time highs. Technology had been underperforming. Now, I want you to notice that on the QQQ, which represents the Nasdaq 100, this is the way the signal line and the histogram would normally look. That the signal line and the histogram would cross over each other on many occasions. Okay. And to be honest with you, the technology looks like it's potentially ready to break out here. We're pressing against all-time highs. Yes, we might have a little pullback before the breakout, but this is what's creating, and I'm just going to use another one of my tools here on Dash Trader. I'm just going to put in a trend line. Right, so here's the trend line. So basically, if you look at that trend line, right, if you look at these two trend lines, you know, you're looking at what kind of looks like, I'm just going to make this a little thicker. I'm going to make it a lot thicker. So when you're looking at these trend lines, what you're noticing is that there's kind of like an ascending triangle formation, meaning that we're making lows, higher low, higher low, higher low, and the highs have been equal for a period of time. So the Nasdaq, along with the MACD, all of it, the MACD histogram is bullish. The MACD signal line is bullish. So is our price pattern on the chart. So all of it is looking bullish. Our point of control is down here at 315. So maybe we get a pullback to in the worst case, 327, 325. But for the most part, this is setting up for potential. We're not long in the tooth, meaning that we're not coming towards the apex of the ascending triangle. So by all extents and purposes, the technology index is continuing to show strength. We are coming into earnings season, not in July, but in August. Actually, no, in July, we're coming into earnings season, the middle of July. So we are coming into earnings season fairly soon. That could potentially push us and break out the technology index, which, because of technology being stronger, that's why the S&P is showing, S&P has a larger percentage of technology than the mainly industrial Dow component, right? So here's the Dow showing more weakness, that now technology is what's dragging up the S&P. So technology looking like it potentially breaking out of an ascending triangle. You have, the S&P showing more strength in the Dow. And certainly the Dow has done well as well. So let's take a look at our other favorite, GBTC, which is totally disparate of this. This is the index that follows Bitcoin. This is the ETF that follows Bitcoin. Look at the signal line has just turned back, possibly getting ready for a bounce, but the MACD has been decidedly bearish since the peak back here. The peak back here at the end of February. Bitcoin has pretty much pulled back all the way down to to 30 on the GBTC from 56. So in February 56, now here trading at 30.31. So a very, very significant pullback. Now the MACD, if you looked at it here, the MACD, I'm just going to put in my my crosshair tool. So the MACD gave us an out and a cross, right? So the MACD signal line indicated an exit here around 46 to 49, and certainly that would have protected you against this drop. And if you got back in the next time that the MACD kind of crossed back up, right, showing possibly a buy signal on the MACD, that would have been around $30 to $31. So you're talking a significant, then that's how you would use your MACD, is you'd use it as kind of a trailing stop. If you watch here, Bitcoin the entire time pretty much stayed up above Here you got a little divergence on the MACD signal line. And then here was the first time that the histogram went negative, and certainly the signal line. And then here was the other time that the histogram and the signal line both went negative. And you would have stayed in there for the lion's share of the move. This was another rebuy after that exit. So you would have got back in using the MACD as a kind of lagging indicator or trailing stop. Let's jump into ETHE. So this is one I don't look at too much because of this kind of break of the chart. That was caused by a split in ETHE. This is Ethereum. If I zoom in a little closer, you can see Ethereum, recently had a really big run up as well. The run kind of happened later and kind of lagged Bitcoin a little bit. But here you can see that same kind of MACD signal line exit. But remember, the MACD signal line is designed for you to kind of stay in the trade longer. So it's a little lagging. And here is the place. You would have gave up about $10, which is a significant amount. But certainly it's down to 23 from 30. So it would have saved you about $8. But you could see here how the signal line stayed steadily up and crossed from below the histogram all the way above the histogram. And obviously you could have taken profit at any point prior to this, but certainly the absolutely I should get out according to the MACD is when the signal line and the histogram both go negative, which would have gotten you out somewhere in the low to mid 30s, depending on how aggressive you were in terms of reading that. And that pretty much brings me to the next one. So I just wanted to bring up and talk about some stocks. Certainly I want to talk about oil, which is USO. So we can see prices of USO, which, if we zoom back, I mean, what an incredible trade from $16, $18. Well, I would say more like $18 in the pandemic low. All the way up to $48. So let's just say 18, 20, 20, and 20 would be 40. This is over a 125% increase, just giving you some, kind of guesstimate math, but tremendous bounce back in the price of oil from a complete drop off of demand all the way back up to kind of the summer highs and now inflationary prices of oil. Thanks to the Colonial Pipeline and et al. So a tremendous run up from the pandemic lows on USO. For everybody who does not know it, USL is a little bit more of the overnight hold safety. So the USO is only for the front month future, whereas USL has all 12-month future contracts. So it doesn't just hold the front month, it's equally divided across all 12 months. So it has a little bit more stability over time. But notice the price went from around $11 all the way up to 24. So it's a similar kind of price movement. It is much lower in price because it is spread out over time. And if anybody has any questions about any of this stuff, you could certainly email us or post a comment and we can go and get you an answer for that. The next thing I want to look at is certainly, talk of the infrastructure deal. It made a tremendous run up during the course of the pandemic is U.S. Steel. U.S. Steel has made a tremendous run up, sitting here at $28. The MACD signal line, our indicator of the week, certainly indicating that this is ready to go. Both the signal line is bullish and the histogram is bullish. And of course, price is bullish because it's over the moving averages, and we are coming to a recent high now the next one I want to look at is 3M. 3M, has made a tremendous run, just like most of the market, but it's certainly giving us some high, lower high, and some rejections of the high. So therefore, 3M not looking quite so bullish, but still, certainly by the MACD's perspective, not quite as bullish. Signal line and histogram, his signal line in a downtrend, and the histogram has gone negative. So that pretty much brings us to a close. I'm going to jump back to our slides. Okay, and just give me 1 second here. So in jumping back to our slides, I just want to give you a couple of updates. Today, we released the 6th of our 8-part video series, The Technicals of Dash Trader on YouTube. Please visit our Dash Trader Pro YouTube channel to view it. Stay up to date with all things Dash by signing up for our monthly newsletter emails. Simply fill out the form at the bottom of our webpage, www.dashtrader.com. Subscribe to our YouTube channel, Dash Trader TV, for Dash Trader Newsroom reminders. Follow us on social media at Dash Trader. Certainly anything at Dash Trader, but it's also on LinkedIn, Twitter, Facebook, and Instagram. I really want to thank everybody for joining me. Certainly check out our latest video. I am available to work with you on coaching. If anybody is interested, you could visit us at learningdaytrading.com as well. And I look forward to seeing everybody in 2 weeks. Thank you very much for joining us. Have a wonderful, wonderful, and safe weekend.